Hello everyone, welcome to my channel. Today I'm going to talk about bookkeeping versus accounting. If you own a small business, you have probably heard the terms bookkeeping and accounting used interchangeable. They are closely related, but they are not the same thing. Understanding the difference can help you figure out what your business actually needs, avoid financial mistakes, and make better decisions about m- managing your money. So, what exactly is the difference between bookkeeping and accounting? I'm going to break it down in simple terms in this video. What is bookkeeping? Bookkeeping is the process of recording and organizing your business financial transaction. Every time your business earns money, pays a bill, purchases supplies, receives a payment, or makes another financial transactions, that activity needs to be recorded accurately. A bookkeeper may handle tasks such as recording sales and expenses, categorizing transactions, reconciling bank accounts, managing accounts receivable, tracking accounts payable, recording payroll information, organizing financial documents, maintaining the general ledger, preparing basic financial reports. Think of bookkeeping as building the financial foundation of your business. If the underlying records are incomplete or inaccurate, the financial reports created from those records may also be unreliable. What is accounting? Accounting generally goes beyond recording transactions. Accounting involves interpreting, analyzing, and using financial information to understand the financial position and performance of a business. An accountant may work with financial statements, analyze business performance, assist with tax preparation and planning, and provide financial guidance depending on their role and qualifications. For example, an accountant might review your financial statements and help you understand why your profit margin has decreased. They may also help identify financial trends, prepare or review tax information, and help you make informed decisions about the future of your business. In simpler terms, bookkeeping focuses heavily on recording what happened, while accounting focuses more on understanding what those numbers mean and what you can do with them. An easy way to think about it: imagine your business is a car. Bookkeeping is like keeping track of everything happening under the hood. It records the financial activity and keeps the information organized. Accounting is like using that information to understand how well the car is performing and where it needs to go next. Both are important. You can have excellent accounting knowledge, but if the underlying bookkeeping is inaccurate, your conclusions may be based on bad information. Why accurate bookkeeping matters? One of the biggest mistakes business owners make is treating bookkeeping as something they only need during the tax season. By the time tax season arrives, you may have months of transactions to organize. That can make it difficult to remember what a particular expense was, find missing receipts, or identify errors. Regular bookkeeping can make the entire process easier. When your books are updated consistently, you can see your revenue, expenses, and financial performance throughout the year. It also gives your accountant more reliable information to work with. Why accounting matters. Bookkeeping tells you what happened financially. Accounting helps you understand why it happened and what it means. For example, imagine your business generated 200,000 in revenue this year compared to 150,000 last year. At a glance, that sounds like great news. But what if your expenses increase from 100,000 to 190,000? Your revenue increased significantly, but your profit may not improve nearly as much. Accounting analysis Accounting analysts can help you identify changes like this and understand the bigger financial picture. Do you need both? For many businesses, bookkeeping and accounting work together. A bookkeeper may maintain accurate day to day records, while an accountant may use those records for financial reporting, tax work, analysis, and planning. However, the exact services you need depend on your business, its size, complexity, and your own financial knowledge. Some small businesses handle basic bookkeeping themselves using accounting software. Others hire a professional bookkeeper. Some businesses may need both bookkeeping and accounting services. The important thing is to make sure someone qualified is responsible for keeping your financial record accurate and up to date. What about taxes? Taxes are another area where bookkeeping and accounting overlap. Your bookkeeping records can provide important information about business income and expenses. An accountant or tax professional may then use those records when preparing tax returns or helping with tax planning. This is one reason accurate bookkeeping is so important. If your income is incomplete or your expenses are incorrectly categorized, your tax information also may be affected. Good bookkeeping does not guarantee that you will pay less tax, but it can help ensure that your financial records are organized and that legitimate tax information isn't overlooked. Bookkeeping versus accounting. The simple difference. Here is the easiest way to remember it. Bookkeeping equal recording and organizing financial transactions. Accounting analyzes and interpreting financial information. Bookkeeping creates the records. Accounting uses those records to provide a deeper understanding of the business. Neither one should be viewed as more important than the other. They serve different purposes and work together. In conclusion, if you are a business owner, understanding the difference between bookkeeping and accounting can help you take better control of your finances. Your bookkeeping should give you accurate, organized financial records. Your accounting should help you understand those records and use them to make informed financial decisions. And when both are working together, you have a much clearer picture of your business. So if you have been wondering whether you need a bookkeeper, an accountant, or both, start by looking at where your business is today. If your transactions ain't being recorded and reconciled consistently, bookkeeping may be the first priority. If your books are already organized, but you need help understanding financial statements, taxes, planning, or other business performance, accounting may become more important. Good bookkeeping tells the story of what happened. Good accounting helps you understand the story and decide what happened next. Thanks for watching this video, and do not forget to subscribe to my channel.